What if I told you there's a way you can actually make money off of the statements that are coming out of economic advisors, policy advisors out of the White House? No one really wins a trade war, but as traders, we're the one group of people who can. My name's Steve Spencer. I've been trading for over 2 decades. And if you're interested in finding out more about these types of trades, click on the link and it will take you to a 2-hour session where I go in depth and my partner Mike Belfiore goes in depth about how to take advantage, find trading setups like this, and how to take advantage of them. So today's trading setup is going to show you how to very quickly take advantage of news flow statements that are coming out that are going to move the market quickly, and how to kind of put on low-risk trades, actually how to put on low-risk trades using a market ETF. And so the trade criteria is, number one, you're trading the SPYs. The SPY ETF represents the S&P 500. It's a group of stocks that are actually strongly impacted by US trade policy. Free trade policy generally is bullish for these stocks. Restrictive trade wars, tariffs is generally bad for these stocks. And so that's going to be, once you learn that and you learn how to kind of parse the statements that come out of the White House, you're going to understand very quickly whether or not to get long or short. The other thing you're going to have to do is you're going to have to buy a newsfeed service. Yeah, you could watch CNBC or you could watch Bloomberg TV, but quite frankly, they're going to start talking about these news items a little bit. You know, you're going to be seeing these moves 50 cents or $1 into the move, and so you're not going to have really as good risk reward. So pony up, spend a couple $100, whatever a typical news feed costs, have a live audio feed, and allow yourself to make these trades where you can actually make thousands of dollars. When a White House economic advisor makes a statement about the market, these news feeds immediately will say, such and such said we're in a trade war with China, or such and such said we're going to be nice to China and things will be good. When they make those statements, usually it's very clear the direction or the bias that their statement's going to move the market. And usually it's probably because Trump's upset the market went down, and he tells his advisor to say something that we support free trade. Or maybe, you know, there's a story in the Wall Street Journal, and the child in the White House sees that and is upset about the story in the Wall Street Journal and tells his advisor to go out and say the opposite. And so very quickly you kind of get used to how these statements move the market. Here's the first example. This was actually yesterday, and I happened to be short the market already, so it worked out quite well. The market had moved up into kind of the longer-term resistance area, the area where we had sold off from Monday morning, and you can kind of see it slowly started to come off. And I circled an area where Larry Kudlow, who I believe his title is the Chief Economic Advisor to the White House, said something like, we're not going to give a special deal to China. The reason why the market had been up in the morning, and this is another important point about the trade, where you can actually be more aggressive and make more money. If in the morning, if the first move is up and the market is strong, and then the White House comes out and says something that's like negative about trade, you want to be even more aggressive on the short side, because a lot of people who bought, like in the morning when we broke out above that blue line, they're now trapped. And especially, you can kind of see the first time we came down to it, like an hour later or whatever, we actually bounced. But in the afternoon, when we got below it and then started to hold below it, we came off a couple more dollars. And so they come out, they make their statement. If it supports free trade, you want to get long the SPYs, don't risk more than 20 cents. If it sounds like we're going to be in a trade war, you want to actually get short, don't risk more than 20 cents. And the aggressiveness will depend on if the statement is in the opposite direction of where the market's gone already for the day, meaning people will get trapped, just like the video, if you go on our YouTube page, you haven't watched it yet, where I talk about scenarios where traders are trapped. You want to be more aggressive when you know that traders who got in recently are trapped. The next one is long. This was today, middle of the day. The market, it'd been kind of weak. I mean, it kind of held the 268, 269 support area in the morning, but kind of failed to hold above 270. It come back down to 269.5, but it was kind of starting to catch a little bit of a bid. And then who gets trumped? Navarro, the trade representative. So this guy is known as being the big hawk. He's the one who causes our trade policy to be as stupid as it is and causing the market to move all over the place. And he comes out and he actually says the opposite of what you would expect him, which is, oh, Trump supports free trade. This is probably, again, because the market sold off hard at the end of the day yesterday, sold off overnight, Trump is probably glued to his screen in the White House, watching Fox News, saying the market's getting hit. It says, get out there and say something that we support free trade, the market's getting hurt. And Navarro gets out there and he says, we support free trade. And so immediately, what do? 269.30, I buy. I put in a stop. below 269.20, below 269. I actually got stopped out of a little bit because it went down a little bit after I bought, but the rest of it I held for the up move to 270.50. And as I said, on these trades, you keep it tight because you don't know. It worked yesterday, it worked today. Eventually, the market will get tired of their dopey statements and realize that they don't mean anything. That's what happened with individual stocks when Trump first got elected or put into office, where people, every time he would talk about Boeing or he'd talk about Lockheed Martin, people would get long or short. But then after like a week, people realized that the stocks actually, or Amazon, right? He was going to have this big fight with Amazon. They realized after the first move down, those stocks would actually trend in the opposite direction. So the pattern right now is people are listening to their statements on trade, but I imagine it will go away. And that's why you want to don't risk too much because you don't know when it's going to end. You might, you take small losses and eventually when it ends, you just stop making the trade. To recap, it's you trade the SPY, you listen to the news feed, you wait till like some economic advisor or trade representative or somebody or the Treasury Secretary, somebody related to commerce, the head of commerce, the old guy, what's his name, Wilbur Ross. They're going to make a statement. Buy aggressively if the comments bias it is the opposite of the morning, the day's direction so far. That's the main thing that I'll say to you. If the market was strong and then they say something, trade war, be really aggressive on the short side. If the market has been really weak and they say free trade, then get aggressively long. Because you know people are going to be trapped from the morning move or the move from the last couple of days. Hopefully you learned something. And by the way, if you want these trades much more in depth, how to find the trades, how to trade the trades, this 2-hour workshop with myself and my partner Mike Bellafiore, check it out.